Hey, what's going on, guys? I want to talk a bit about in terms of three ways that as an investor you can actually make money from stocks, right? Now we talk about three ways. The first one that I want to talk about is day trading, right? Day trading, what it really means is you're going to buy stocks, um, not to hold for day after day. You'll probably be holding stocks intraday. So when I say intraday, the markets are open from 9:30 a.m. to 4 p.m. On the U.S. the stock markets. So you're trying to buy stocks intraday. So for example, or you're trying to buy or sell stocks on an intraday basis. So what do I really mean? So for example, let's take a look at say Tesla, right? So if you are going to hold for a swing trade. So swing trade means you're holding it for multiple days. So the chart over here, what you see over here is a daily chart, right? So each day, for example, this day signifies one particular day. This is one particular day. This is one particular day. So this is one particular day in terms of how you are, if you're holding it over time. So a lot of value investors or different types of investors, they'll buy something and they'll just hold on for it, right? So that's one way, but the other one is to do it on an intraday basis. So it means you are looking at a particular stock only from an intraday perspective. So for example, if you're looking at this stock, which is Tesla on January 18th, 2019, this is a stock which is based on the 5-minute chart, right? So 5 minute is an intraday basis. So what you see on here, I mean, if somebody goes and shorts this stock, I mean, you can actually buy it, but this one, if you see it gapping down, you actually go and buy it. If you actually go and short it, so let's say you go and short it somewhere around 9:40 a.m. and you hold it all the way till probably somewhere around market close, right? So somewhere around, give or take, say 3:45 something, right? So this is a day trading. This is what you call a day trading because based on 5 minutes on an intraday basis, and you're only holding it on an intraday basis. So you are selling it and then you will buy it again. You can do something reverse as well. I mean, the stocks are doing really well. You can go and buy your stock and then you sell at the end of the day. So that's one way to do it. That's day trading, right? A lot of profits can be made. For example, the risk you have to put on the table is going to be pretty low, and the rewards can be a lot of on the upside. For example, once again, if I go back on Tesla, let's say you had 100 shares, right? You go and sell something over here for 320, and by the time that is done is 300. The stock is somewhere around 300 bucks. So between 320 and 300, there's a $20 move. So if you have 100 shares, you would have made $2,000, right? And if you had your risk contained, you know what? If you short at 320, maybe you have your stop at one, put a dollar stop or a $2 stop, a $3 stop. I mean, that's a really great risk reward, right? You have risk $3, you make a gain of $20. That's a really great. Now, as compared to if you try to go and buy something like a Tesla stock, let's say you want to do it on a daily. I mean, you're a buy and hold investor, right? There's another way to do it where you actually buy something and you hold it and hoping for the price to go up. So this is more of a swing trading or value investing where you're holding it for a longer time frame. Right, so in this one, for example, in this one, if you think you want to go and put a stop on it, when you talk about daily chart, your stops are going to be wide, like really wide. I mean, because you're looking at one full candle, right? One full candle on intraday, this stock can move easily about $20, right? So, I mean, your risk is quite a bit. If you trade on an intraday basis, your risk is lesser. Then the other investors that you can, the third type of investors are dividend investors, right? So for example, Apple is a dividend paying stock, right? So what you see on here, if you take a look on this Apple, you'll see a dividend yield of 1.86%. So means based on $156.82, whatever the price it is, on a yearly basis, it will, and then based on how much dividend is being paid out, it's that you will probably make about 1.86%. Right? So there are people who are only dividend buyers who only wants to go and buy dividend paying stocks, right? So this is really for them. So three ways, as I mentioned once again. One way is via day trading, where you are holding stocks on an intraday basis. So intraday basis could be a 5-minute chart, could be a 15-minute chart, right? It could be a 30-minute chart, right? So these are all intraday basis. You're buying or selling between 9:30 and 4. Once you're done, it's done, right? You don't hold anything overnight. If you're holding anything overnight, then that's more of a swing trading or value-based investing. And the third, as I mentioned, if you are a dividend owner, right? So for example, if you look at Apple, if I look at this Apple stock down here, you see, this stock actually pays out dividends, right? It pays out 73 cents dividend, 73 cents dividend. So if you look at on a yearly basis, you get about what? It used to pay 63, now it's paying 73 cents. So it looks like their dividends increases all the time. So now Apple is actually becoming more of a dividend paying stock, right? It didn't used to pay dividends, but now it is starting to pay on dividends, right? So that's how you can start investing. If you are looking to invest, try to find out, if you have time, if you have time and you can, or if you have a job where you can actually manage a particular stock on an intraday basis, then the higher profits are on the daily charts, on the intraday charts. If you have less time, right? If you have less time, then you probably want to be swing investing, which is holding stocks on a daily chart, on a daily basis. Buy something here and sell something here, right? Or if you are not really concerned about making exponential gains, then hey, you can actually do dividend-based investing as well, where you go and buy dividend-paying stocks, right? So there's a lot of ways you can go and find dividend-paying stocks. Easiest way you can do it, you can go to, say, finviz.com, right? And then you can do screener. So you can do a dividend yield over here. Maybe you want to have stocks which have paying a dividend yield over 3%, right? So it means if you put in $100, it's going to give you a $3 dividend, right? Now keep in mind, just because it gives you dividend doesn't mean that the price cannot drop. The price can actually drop as well, right? So just keep in mind, you do have this 3% of a buffer, but hey, if the stock drops down 30%, and if you made 3%, you're still negative. So those are 3 ways that you can actually make money by investing in stocks. If you have any questions, feel free to like and subscribe, and let me know, hey, out of the 3 methods that I mentioned, in terms of the day trading, value-based investing or swing trading, and based on dividend paying, what kind of investor are you, and what kind of videos would you like to see to help you grow your type of investing? Have a good one.